What's up everyone, and welcome back to Explain the Charts. Today, November 11th, 2025, we are taking a deep dive into an altcoin that has been absolutely roaring back to life, Litecoin or LTCUSD. The headlines are buzzing, and for good reason. Litecoin has decisively reclaimed the critical $100 psychological level. News outlets are highlighting a surge in on-chain volume to record highs, with one report noting a staggering $15.1 billion in weekly transaction volume, the highest in Litecoin's history. This isn't just retail excitement. There's strong evidence of renewed whale activity, with a reported 6% growth in wallets holding over 100,000 LTC. On top of that, major institutional players are making moves, such as MEI Pharma's reported allocation of $100 million to a Litecoin treasury, adding significant fundamental weight to this rally. But the biggest story, and the one likely driving most of this momentum, is the massive speculation around spot Litecoin ETFs. Multiple firms, including Grayscale and Canary Capital, have filings with the SEC, and analysts are giving approval odds as high as 90% by late 2025. This has reignited the narrative of Litecoin as digital silver to Bitcoin's digital gold, with many seeing it as an overlooked workhorse that is finally getting its moment to shine. Now, with all that bullish news as our backdrop, let's jump into the charts and see how it all translates to the price action. Looking here at the daily chart, I've filtered the view to the start of November to really highlight this recent move. After a period of consolidation and some sharp drops, you can see the volume starting to pick up right at the beginning of the month. The real explosion happened right here on November 7th, with a massive 17% green candle that smashed through multiple resistance levels. This candle took us from around $87 all the way past $101, decisively reclaiming that key psychological barrier. This move corresponds perfectly with the flood of news about ETF hype and record-breaking on-chain metrics we just discussed. Following that explosive day, we saw another push up to a recent high of about 113.69 on November 9th. However, yesterday's candle on November 10th shows a pullback, closing down about 5.5%. This suggests some profit-taking is occurring after such a rapid ascent, which is perfectly healthy and expected. The key thing to note is that the price held well above the $100 mark, with the low of the day at 103.52, showing that buyers stepped in to defend that level. Let's zoom back out to the full daily chart to map out our key levels for the bigger picture. First, our most critical new support is now the psychological $100 level. As long as we hold above this, the bullish short-term structure remains firmly intact. If we do break below 100, the next significant support zone lies between $93 and $95, which acted as strong resistance at the end of October. Below that, the major support to watch is the low from November 4th, right around $80. A break below that level would signal a major reversal and negate the current bullish momentum. Now, looking up, our immediate resistance is the recent high we just made around $113 to $114. A daily close above this level would be a strong signal of continuation for the bulls. The next major target area to watch is the zone between $125 and $130. You can see on the chart that this area acted as significant resistance back in January and February of this year. If we can clear that, the next major hurdle would be the highs from late 2024, specifically the peak around $147 we saw in early December. Many analysts are calling for a move to $140, and that lines up perfectly with this historical resistance. Now let's switch over to the 1-hour chart to get a closer look at the current price action. Here we can see that powerful impulse move from the 7th of November that took us to the $113 peak. Since hitting that peak, the price has been in a corrective pattern, essentially consolidating in a range. This pattern looks a bit like a bullish flag or pennant, which is a continuation pattern that often forms after a strong upward move. The price has been making a series of lower highs and higher lows, coiling tighter and tighter. We can see the price testing the $104 level repeatedly over the past day. This consolidation is allowing the market to digest the massive gains and prepare for its next move. Volume has tapered off during this consolidation, which is typical for this type of pattern. What we're looking for now is a breakout from this pattern. A break above the upper trend line, roughly around $108, could signal the start of the next leg up. Conversely, a break below the lower trend line, around $103, could lead to a deeper retest of that critical $100 support level. Drilling down even further to the 15-minute chart, we can analyze the price action from yesterday, November 10th. The day started strong, with an initial push towards $113, but it failed to break the previous high. This failure led to a sharp sell-off throughout the day, which confirms the profit-taking we mentioned earlier. You can see the price found some temporary support around the $104 level in the later part of the trading day. The price action has been choppy and range-bound in the last several hours of trading. This indicates a period of indecision in the very short term. Traders are likely waiting for a catalyst, whether it's more ETF news or a decisive move in the broader crypto market. The immediate battle is between buyers trying to establish support above $104 and sellers pushing down from the $108 resistance. Alright, let's zoom back out to the daily chart and recap what we've learned and what to look for. The fundamental news backdrop for Litecoin is overwhelmingly bullish, driven by record on-chain activity and immense ETF speculation. The technical picture confirms this with a powerful breakout and the reclaiming of the $100 level. To summarize our key price levels, major support is at $100, followed by the $93 to $95 zone. Immediate resistance is at the recent high of $114. The primary upside targets are the $125 to $130 resistance zone, and then the major hurdle near $140 to $147. So, what are the potential scenarios from here? Our primary bullish scenario, which I would give a 65% probability, is that this consolidation is a pause before the next leg up. This would be reinforced by the price holding firmly above $100 and breaking out of the current flag pattern on the hourly chart. Positive news on the ETF front would almost certainly trigger a move to test the $125 resistance and possibly higher. A secondary bearish scenario, with about a 35% probability, would involve a failure to hold the $100 support level. This could be caused by negative regulatory news, a broader market downturn, or simply sustained profit-taking. A break below 100 and especially below 93 would signal a deeper correction, potentially back into the $80 range. Going forward, keep a close eye on trading volume. A surge in volume on an upward move would confirm bullish strength, while declining volume on rallies could signal exhaustion. Also, any news headlines regarding the SEC and the pending Litecoin ETF applications will be a major market mover. That's our in-depth look at Litecoin for today. Thank you for watching this episode of Explain the Charts. Remember, this video is for informational and educational purposes only and should not be considered financial advice. Cryptocurrency markets are extremely volatile, and you should always do your own research and consult with a professional before making any investment decisions. Trade smart, and we'll see you in the next one.